Welcome to Chapter 7. It's Accounting Information Systems. If you feel like this is kind of out of place, like we've been talking all about accounting and everything, and then all of a sudden this is kind of doesn't fit, that's okay. It's normal because I agree with you. It's just kind of a weird chapter in the middle of this textbook. Good information. Not saying it isn't. It's just feels a little out of place. So, but let's go ahead and jump into Chapter 7, Accounting Information Systems. Here are your learning objectives. You can pause the video and read those. I'm going to be going through these slides relatively quickly. This may be your fastest video because there's not a whole lot here that I want you to worry about from this class. You take accounting information systems courses and things like that as part of your major, and if you're accounting, and so you'll learn these concepts more in depth at that time. But I will highlight some of the stuff here. System principles. In order to establish an accounting information system, you need to have these system principles installed. Control needs to be, you need to be able to control the system. Relevance, it needs to be relevant. It's no point in having a system that creates like building estimates if you don't do building estimates. So it's no point if it's not relevant. Compatibility needs to be compatible with your company. You need to be able to make sure that what it does is what you need it to do. Flexibility, it needs to be able to grow with you. It needs to be able to make sure that your system can do what you need it to do in the future. And then cost benefit. If this system is going to cost you so much money that it's going to outweigh the benefit, then don't do it. If it's the cost needs to be lower than the benefit. Here are some system components. These things are some of the things you need to know. Source documents, those are invoices, statements, anything, bills you get in the mail, bank statements. I think I said that already. Input devices, scanners, keyboards, anything that would input the information into the system. Information processor. Information processor is not necessarily your computer processor, like a lot of you IT people are thinking right now. What it is software that's processing the information. It's going to analyze and put the information in a logical way for the user to be able to pull that data. And then, of course, you have the information storage, could be in the cloud, could be wherever. And then output devices. That's your phone, your tablet, your projectors, TV monitors, just things like that. The biggest part of this chapter that I want you to learn is about special journals, controlling accounts, and subsidiary ledgers. All right. If you can understand these items here and the concepts here, you'll be fine. So when a company uses the special journals, these are special journals, except for the general journal, which is the general journal. We've been using that this whole time. But if the company uses special journals, then the general journal is going to be used for transactions that don't go into other journals. First, you have the sales journal. The sales journal is used for recording credit sales only. Because if you have a cash sale, it's going to go into the cash receipts journal. For any cash that the company receives, it's going to be put in the cash receipts journal. Purchases journal is for recording purchases through credit only. So if I owe money as a part of the purchase, then I will put it in the purchases journal. And the final one is the cash payments journal. If I pay cash for those things that I got, then I would put it in the cash payments or any other cash payment I would have. And then the general journal again is for everything that doesn't fit into those four journals, such as gains and losses, owner contribution of non-cash items, things like that. Adjusting journal entries, closing journal entries, those all would be going in the general journal in that situation. So here's some subsidiary ledgers. All right, you have your subsidiary ledgers. You have a controlling account over those subsidiary ledgers, and primarily the subsidiary ledgers live in the accounts receivable and accounts payable. That's really where we're going to focus on anyway, because it's in my opinion it's a little more obvious. So here's what it looks like. You have your general ledger. Within the general ledger, you have the accounts payable ledger. That accounts payable ledger is going to have within it the subsidiary ledgers, which are going to be tied to the accounts receivable or accounts payable. Now remember, accounts receivable is only receivables that are owed to us from our customers. So if somebody else owes you money because of a loan you've given them, We're not putting that in here. That's a different account. Accounts receivable is only money owed to us by customers as a result of the sale or other, like if we're a service-oriented company, then it would be for any action or work we did for them. And conversely, the accounts payable ledger is going to only be used for suppliers, people we buy stuff from to keep our business in going. So if we borrow money from the bank, we're not going to put that under accounts payable. That would be a different account, notes payable or something. And the notes payable would have its own subsidiary ledgers. We'd have notes payable, and then we would have the subsidiary ledgers of the notes payable to the banks and other institutions that we owe the money to. So that's the main difference between those. Now, how do we do this? How do we journalize these transactions using these different journals? Well, we're going to go through each one of those. Here is the sales journal, all right? So when we do this, we have that line up here at the top, up here. We're going to have the date. We're going to have the account debited. This is the subsidiary ledger account. The invoice number, the PR is whether we posted it to this, so that would be checked if it's posted. And then because it's a sales journal, when we have a sales, remember we have two journal entries, one that affects the revenue and then one that affects the inventory. This first one's going to impact the revenue side, right? We're going to have a credit to sales and a debit to accounts receivable. Which accounts receivable does it go to? Here it is, the account, Jason Henry. Accounts receivable ledger, Jason Henry. There it is, and it puts it into there when we post it. Then we have the inventory side of it, the cost of goods sold. We're going to debit that and credit to inventory. So all of these journal entries are going to be dealing only with specific sales. That simple, okay? All right. Now there's this whole thing called proving the ledgers, and I haven't quite been able to put my arms around it because in order to prove the ledgers, you need to pull information from outside the system and compare it to that which is inside the system. All this is doing is stating the obvious. So if you go back to this other slide, it's showing you all the accounts and the balance over here, right? So you see the balance here. Albert Company owes us 750. Frank Booth owes us 175, and so on. Okay. So what this is doing is showing you, hey, these are all the people that owe you the money, and that's the total. Well, okay, that's great. And we can come over here and see based on our sales, that's what's owed to us if we haven't received any payments. 2150. Look, 2150. If you pull two reports from the same system, you're going to get the right number. It's going to match every time. Unless something's really buggy with that system, at which point then you probably got hosed out of that system. So proving the stuff according to what this book is teaching us, yes, it's just maybe they're saying it proving based on the fact that they're saying, hey, look, here's all the answers, it totals and see it totals that. I don't know. In accounting, in my experience of proving, you get source documents and you compare the totals with what's in the system, and that's proving it for me. So that's my only guess as far as what they're doing. Sales returns and allowances, we record this in the general journal because it's not related to those things. Cash receipts, basically anything cash related, we're going to put in here. So if we have, we're debiting cash and everything because we're receiving cash. And a lot of times we're dealing with this accounts receivable. And if we give credit terms, we're going to be dealing with these sales discounts. But remember, the allowances or the returns are going to be put into the general journal. And then we have other accounts credited. So for example, if in, a note from the bank, we got money from a note to the bank. Let me see what that one is. Note, oh, no, notes payable. Oh, we borrowed money. Okay, that makes more sense. I'm like, why did we pay? Yeah, we borrowed money in this situation, and then interest revenue. We got money, so we're going to be crediting these other accounts, still debiting the cash, but we're crediting these accounts and we're putting them in these other ledgers. It kind of gets confusing, and I hope you guys aren't confused. Again, this is the same thing. You're pulling the same data from the same system and comparing it, making sure it works. And of course, it's going to work because if it doesn't, you got a jacked up system. If this gets confusing, don't worry. Just practice this in the homework. Follow my videos. Basically, just get through the homework. I just think that this can be kind of confusing. I hope it's not. But it's basically all you're doing is instead of doing the actual journal entries, is you're annotating that you're for when you put it in the this is the purchases journal, so we're doing credit purchases. We're going to be all of these accounts here are going to get a credit to their account that we owe them the money that we are buying stuff from. Now, what are we buying from? Okay, we're going to debit our inventory or maybe office supplies or something else. Okay, either way, there it is. Accounts payable, though, this is the money that's going to be going to each one of their subsidiary accounts and showing that we owe them that amount. That's really all this is doing, is it's showing you kind of munched together, proving the ledger again. Yeah, we proved it. Good job. We're awesome. I'm not, I hesitate to say what I'm going to do and what I'm not going to do on these videos because these videos span over time and I might adjust. But I think I can comfortably say that I'm never going to give you a quiz question, a homework assignment, or anything that involves proving the ledger or doing that kind of stuff. That's more of a way just to kind of let you know that it's there. So if you watch this video and then you do any of the homework or whatever, and you're like, hey Brian, you said you wouldn't do this, just let me know. I just don't see any benefit from it. If you're going to be an accountant anyway, you're going to be taking some auditing classes, and auditing is going to show you how to really do those things. And again, if you're just pulling two reports out of the same system, all you're doing is pulling two reports that are going to obviously match because they're not going to pull different data if you're going to tell them to pull the same data. It's my experience speaking, which is why sometimes I look at some of these academic things and I'm like, I think they mean something else maybe or whatever. I don't know. Sorry, I'll back on track. Cash payments journal. Again, this is when we're paying out any cash. So we're going to credit our cash every single time. And then here's our account we're going to debit. And we're going to put the money or the amounts in each one of these. So like if we, let's see, accounts, other teams. So we had salaries expense. Okay, so we're paying out our salaries here. Um, Anyway, you can see here. These shouldn't be inventory. I don't know why that's there. Payee if we're paying salary expense. That's really weird. That's not looking right. So, God, these slides sometimes you just scratch your head. Anyway, here you go. General journal entries. You can pause it and look at that if you really want. Technology-based accounting systems, you can either buy off the shelf ones like QuickBooks and Quicken, things like that, or you can have a company come in and just basically create it for you. Uh, Data processing, accounting, yeah, computer network accounting. If you guys, I hope you know about those types of things. If you don't, I don't really know a whole lot about teaching you about networks. Take some IT classes. That's the best I can tell you. This is just more of an interesting data. Data analytics and data visualization. Now, I will tell you this though, that data analytics is a very strong profession. It's actually something I'm considering doing a doctorate in if I ever do my doctorate, because data analytics. First of all, I love data analytics, and second of all, it's so not knowledgeable. It's so educated. Can't even think of the word. It's I just can't think of the word. Bottom line is it's an amazing thing. It helps you. You can make so many good decisions because you can read the digital book. Kind of like from Avengers or not Avengers. Anyway, sorry, this video at the end is kind of getting weird right now. Um, Data analytics just is an amazing way to be able to make informed decisions that will help the company or anyone else accomplish the goals that they have. If you can almost predict what's going to happen based on the data, uh, it really will solidify a company and make sure that they're around for a long time. So anyway, if you're thinking of anything other than accounting, I would definitely push you into the data analytics area. It is definitely a good field. Cloud computing, okay, basically anything you use, it seems like these days has something in the cloud. Um, Maybe even my head's in the cloud. I don't know. All right. Dave's payable outstanding. I'm not gonna do that one because I don't have you guys ever look at Dave's payable outstanding. But there was the formula if you want to learn how to do that. That's the end of chapter 7. Let me give you your word. Um, the word today is finance. 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 I want to finance my goals. I want to finance my home, my car, whatever. Finance. Finance. All right. Hey, you guys have a good one. We'll see you guys in the next chapters and take care.